Test, test, test. Test, test. We'll go live here in a moment. Let me know in the chat if you guys can hear this. Had a little bit of problems with my audio this morning. Test. All right, good morning, everybody. Welcome, welcome, welcome. Whew. Now I'm burning up, actually. It's freezing this morning. Coco's doing good. Coco's doing good. How's everyone? What's up, John? What's up, Coffee? What's up, Kevin? What's up, Mental? What's up, 2023? A gainer. What's up, Hugh? How's everybody doing? All right, we're going to get into the markets, kind of take a look around, see what's going on with the S&P 500, the Qs, the IWM. We'll go over some of these expected moves. All right, what's up, John Carr? Good morning. Still rocking the Yankees hat. Yeah, I'm actually not really like a crazy baseball fan or anything like that, so I don't really follow along too much. But I got this at a Yankees game when I was in New York. I'm more of a basketball fan, which you can probably see me on the 15th. Golden One Arena. I'll be there. Row one, because that's how I do it. Row one against the Timberwolves. Nah, I'm just kidding. It was a gift. I don't buy tickets like that. All right, let's take a look here at the S&P 500. This music's putting me to sleep too. Boom, 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 boom. You ever won an NBA baller? It's a great experience. I get to do it maybe once or twice a year. A season. Once a season. I don't buy the tickets. They're a gift. They're from a friend. Okay. So as we already know, let's get into the markets now. As we already know, as people are rolling in, the S&P 500 has been on a monster run, okay? This is obvious, right? We go back, we look at it, whoa, holy moly, the market's been going. You go back a little bit further, we talked about how there is a pin at 58.50, and when price gets up to these pins, it can get caught up in these areas, And we were really looking for it break down into and around these lower levels to maybe shake some people out. It just so happens after the election came, we see this monster rip. And where do we go to? We went to 6,000, right? We're slightly above 6,000 right now. 6,000 is still a massive area of concentration, but traders are reaching up a little bit further. So if we go to net gamma, give an update here. 6,050 people were reaching out to earlier, right? This was actually a larger level. And then 6,000 is still really kind of that main focus. So this week, there's actually quite a large expiration, right? If I go to net gamma, you'll see on 11/15, Friday 11/15, you're going to have a lot of this roll off. Okay? So is this going to allow us to free this 6,000 marker and potentially see if people start reaching out further is going to be an important aspect to all of this. But as it stands right now, when I see this, it means that we can really kind of get hung up around this level for the week. That doesn't mean we just stay at 6,000 or go underneath it. It means we can very well do what we're doing. We overshoot it. We come back in a little bit. Oh, we undercut it. Oh, see, it's going to, and you could do exactly what we did at 58.50, 59.50 or whatever it was. So I'd be very cautious as far as executing new positions and so forth into these levels, unless if it really makes sense just from the chart perspective, because we are in positive gamma territory, right? We are above rising 5-day moving averages. So this is all good things to have, to be adding more exposure. But you got to also ask yourself where the market came from and how fast. And the reason why this is important, even if you're trading individual equities, is because a lot of individual equities you can look at their correlation to the S&P 500. And if they have a strong correlation to the S&P 500 and the S&P 500 pauses out or comes in, even a great looking chart, it's going to have to digest even further if it has that strong correlation. So good. All right, we'll see if, by the way, the ICT guy, he wanted me to set up this stream for 11:11 at 11. He said he wanted to go on live with me. I doubt he's going to show up. That's just his style. He ain't going to show up. But we'll see if he does. I know that he's not going to show up because we have to set up a Zoom call or restream, and he hasn't reached out anything other than just talking as if he was. But yeah, that's what we're here today. We're just here, see if he shows up. He said maybe in the comments or whatever. Cool stuff, dude. Cool stuff, dude. Take a look at market net flow. Market net flow is bullish. Got the green line above the red line. They're diverging from one another, so this is a bullish divergence. The white line is the SPY, so I can take that off. And then you do have convergence right here, right? Which means that the market flow, right? If you're trying to trade with the flow, it'd be to the upside. If you take a look at the 0-date levels, you have this 600 kind of wall right over here on SPY. We're going to hop into some of the daily expected moves for SPY, Qs, IWM. You can see today we're pretty much just flatlined right now. We're right at that week-to-date daily expected move for the week. And as far as the weekly expected moves go for the SPY, we have about 606.50 up above us and about 590 below us. So this is what the market's pricing in as far as risk for the entire week. For the day, and by the way, this is not that huge of a move. It's like $8. We're coming off of a $15 expected move, which we hit a 2 standard deviation on last week. What's up, Left Set Match? Good morning. We're outside of the upper monthly expected move. This is what the market priced in as far as risk to the upside for the entire month of November. So we're already outside of it. When these are the cases, it's likely, and especially when we're at this main level, this 600 level, 6,000 on SPX, coming back in here, I wouldn't rule it out at all. Now, if we get some more sell side, where do we look for? I would say look for that presidential election anchored volume weighted average price to see what price would do in and around these levels. We haven't tested that yet. We'll test it at some point, whether that's this week, next week, who knows? Okay. But that is that kind of level to watch. If we start getting below that, what this tells us is the average person based off of this time and volume would be now underwater. So after this big rally, the average person based off of this time and this volume that's traded would be underwater, which that can obviously have a psychological impact on trade. So that's what SPY looks like today. IWM already came into its upper daily expected move. Now, IWM has been seeing more relative strength, and this is coming from a lot of the banks, some of the energy, regional banks, right? A huge move. We're way outside of the monthly expected move, and we're not far from the quarterly expected move. So if we do get up in this area, you know, by this month, I would definitely think that you'd want to probably take some profits, update your stop loss, potentially maybe even look for a way to short it for like a small piece of inventory, because it's likely this was pricing for the quarter and it's only November 11th. We still got 2 trading months left. So if we do get way outside of this, that could be a potential place to play back into here. We're just not there yet, and there's a lot of strength. So it's not my favorite type of trade until we really start getting out of these crazy levels. Now, you might be thinking that'd be crazy, but on the flip side to that, this quarter to date move, when it was SPY, right? This was, pretend this chart was SPY up here. Okay, this is starting in August. In 4 days of August or 5 days of August, we went underneath the lower quarterly expected move. And we talked about the same thing. We said, if you're, you know, a longer term investor, you can take advantage of these by just adding some in. Or if you want to be aggressive and not wait for strength, because in just a few trading sessions, it was underneath the quarter expected move. And what happened in SPY after that scare in August? All right, let's go back to August. Come on, it was right here. So the quarter to date in August was like right around this level here. And it went for the run. What's up, John? Okay, let's take a look at, that was, I did IWM, right? Did I do Qs already? Yeah, IWM, holding up rather strong. Qs. We'll pull up the individual names in Qs too. It's kind of floating around its daily implied move, or daily anchored volume weighted average price right now. And I will say it's getting very tight price action. Look at this. So the Qs, let's see some of the underlines, but this is getting very tight right here. So we'll probably see a nice move in the Qs in the very near future, whether that breaks down to the downside and sees a quick flush, or breaks to the upside and tries to go retest the high of day. I'd be watching that one. So if we look at some individual names in the Qs, we take a look at NVIDIA. This one's down about 1%. This is coming off the lows of the trading session. It came into a rising 5-day moving average. We started seeing a little bit of a bounce from it. Go figure. We're getting a little digestion. Barely. Right. Apple's the one that's seeing more weakness today, and has not been really getting that kind of presidential boost that we've been seeing across other names. So this one's sitting at around lows of the day, so I'd be a lot more cautious with just hopping in blindly to something like this, to Apple. Microsoft, too, just saw a kind of a capitulatory move on the 1 minute. Just a lot of volume that just kind of flushed it out. So if Microsoft wants to start finding some sort of a bottom in these areas, that was a very large range candle here. Sometimes this is kind of capitulatory type price action here. So we'll see what comes from that. But coming up, maybe back down, or chops around into the area. But that's down 1%. If this wants to all of a sudden start coming back up, that's really going to help out this little tight pattern right here, by the way. Okay, so then Google's holding up for the day, up 74 basis points. Rather choppy. Daily time frame, consolidating nicely. So just digesting. Amazon also just digesting a very strong run. So nothing crazy here. Nothing crazy at all. 15-minute time frame, you can see it's just kind of consolidating, pulling back into a rising 5-day moving average. And then the 1 minute, so more intraday, yeah, it's just not the greatest look, right? It's not the greatest look. Maybe if we start breaking back above this little area where we are seeing, you know, some higher lows, higher lows, higher lows, higher lows. And if we can start breaking back through this, maybe that produces a pop. But just keep in mind, it's downwards price action, daily time frame we're digesting. Okay, so this one's kind of just in a pause. Meta, also nothing really setting up here from a daily intraday perspective. Holding above a rising 5-day. And then on the daily time frame, we are just digesting in kind of more of a broadening formation. So we get expansion, we contracted, and then it's starting to get a little bit crazier, which is not necessarily bearish at all, right? It's not necessarily bearish. These things could go like this and then take off to the upside. We've seen that plenty of times, but you want to see it prove strength. So what I like to see is these lows that are connecting, right? Somewhat almost connecting, is I like to see pullbacks, but then I like to see the higher low within this and then kind of consolidate and then to break, because it offers up a little bit better risk versus the reward potential. So Meta is just kind of holding itself together right there. I exited my Google today. And now I'm just waiting. Oh, actually, you know what? Give me a second. Let me double check, because I had to. I traded in a couple accounts. Give me a second. I took it out of one account. I don't remember if I took it out of this account. No, I do still have a position in Google. Yeah, I do. It's limited. It's like about 4% of my portfolio. So, nothing crazy. It was higher. I think it was more like 6 to 8% of my portfolio, and then I reduced it just to kind of chill out the volatility. Yeah, that was it ended up playing out very well. Google did. A couple other trades that I took, I still have positions in. Let me, I'll go through those because I actually need to check on them. So a couple other ones was AON. So AON, I traded right here, and then I was going to use this kind of more of the risk zone. So I'm up in this position. I did scale profits just the other trading session, but I still have not even 3% of a position there. And then I have FFIV. This was traded as a speculation trade to break out right here on this day. And I still have a position there, but it's only 2%. So I scaled out of that. I have a position in Sentinel-1, and I think this is still early. S, ticker symbol S, where we're seeing a series of higher lows building in, and we're kind of trying to break through that. So I feel like we can come test the year-to-date high at some point, and we're above a rising 20-day, 50-day, the 200, starting to maybe potentially, maybe break from this or come back in and then, try to go for it. So I do have a position there. That one is, once again, it's not that big of a position. It's about a 4% position. I have a little position in MLCO, which I think I actually might be hitting today, getting out of it. Yeah, this one's down slightly. Now it is. So I may potentially be exiting this. I'll see how it kind of closes for the day, if we get some more sell side or not. But we did break out of this compression pattern, and we're just kind of pulling back. I'll see how it closes to determine whether or not I just want to exit it out. XBI, I'm in there. I'm in XBI. It's breaking out today. I traded it down here. I love patterns like this. So in the market, so if you see like a larger structure, like this was a large ascending triangle, but within that structure, you have also a smaller structure where it gets a little bit tighter. This offers up early entries. So I did early entry for the hopes that it would come back up here, which it did. I removed some of it, and then I look to add more on after I see next consolidation. So I keep a little bit off. So I take this profit, see where this goes. Maybe it goes up, never comes back. Maybe it does. I don't know. But if it does come back down and consolidate and the averages catch up, I look to try to re-enter for continuation. So that one's going fine. Yeah, Felipe, on Qs, I was just talking about that. On the 15-minute time frame, I was looking at the compression right here. It's kind of just going back and forth right now. I think that we're probably going to get some sort of move here very soon with this. Market net flow, it's still technically bullish divergence. The convergence is waning here, so it's still favors the bulls, but you got to keep in mind that we're right at that call wall, right? That 6,000. So to come back down to 6,000 and just trade around here, this is like where we get the chop, right? When we were stuck in a high level of gamma. So we got our 6,000 on the last stream, and now we got to just see really kind of how what the gamma exposure looks like at the end of the week when this all clears. It's going to be hard to break from 6,000, people. Like look at this level. There's 6,000 right here. My clicker's on it. 6,000. Boom. Okay, this is the exposure right here. This is a huge area of concentration. Now, earlier this morning, there were traders reaching out to 60.50, right? That makes sense. But look at how it's changed very quickly. So to see breaks above it and come back in, that's just kind of what happens in these environments. So the trade was really to play it up into these areas. And then it's all about kind of just being patient and letting it go. And this, unfortunately, a lot of people miss the trade, and then they'll go heavy at a very high exposure area while the market's calming down, and then they'll get shaken out a bunch. And then all of a sudden we go on another rally because this expires and we get higher, more movement to the upside. And then they trace that into like a key level. And so you get you got to be just very cautious. And that's why I kind of just look at the various things that are taking place from a market conditions perspective. The gamma flip line, right? The gamma flip line's way down here. So we're in positive gamma territory. So even if we pull all the way down here, that would scare a lot of people. But I would know that, hey, even if we pull down into here, 59.50, say, we're still in positive gamma territory at the current moment. So the dealers are going to look to buy the dip, sell the rip, and we'd be just under that 6,000 call wall. And if this remains an area of focus, these type of moves would not scare me. I would be looking to get back in, right? As long as we're above a rising 5-day moving average and we're in positive gamma territory, I'm going to be leaning bullish no matter what. But just because I'm bullish doesn't mean I'm going to buy a bunch of new positions right here. Not going to happen, right? Not going to happen. ICT ain't going to show up. Are we shocked? Are we shocked? I'm not. Nor do I care. But it would have been fun. It would have been fun. Okay. We'll look at some other names. Well, the market's kind of doing its thing here. See if anything opens up as far as a trade idea. I did post one earlier this morning around an energy name. Yeah, not shocked, Katie. Yeah, I know. And you know what's just funny about it is I wasn't even talking to him directly. He actually is the one that came into the conversation and then fired off some argumentative insults. And then I just wouldn't let it go. So then I got him to the point where he just said, I'll go on a live with you anytime. Just pick the time. I picked the time. He says, okay, I'll be there. And I was like, okay, perfect. He was like, send me the link. And I was like, what do you mean send you the link to the YouTube video? All right. So I said, I got to get you the Zoom invitation. I'm not going to give the Zoom password on the internet, because then anybody can join in and just share their screen and do stupid stuff. And he was like, oh no, I mean, like, you know, in the comments, I don't do interviews. I'm like, okay, I'm not going to interview you. We're just going to talk about markets like you usually do. And then he says, no, that's a no-go because of monetization. I said, okay, let's turn monetization off. And then he just disappeared. Yeah, he won't show up ever. I know. And that's the thing. Like, I don't know why, right? I don't have no problem, by the way. A lot of people might think that I do. I do not have a problem with how they approach, like, reading the charts. My problem is that they actually think it's a holy grail. Like, they'll spend so much time trying to focus in on all these little candles on like a 30-second time frame. And then this other time frame and this other. It's like, there are so many tools here that you can just use to. It just sucks because it gets into a lot of new traders fall for it. Like, they can all of a sudden like predict things, and it just sets them back so far. So far. It is what it is. It is what it is. And the thing, and the reason why I say that is because I'm speaking from a place where I know that it's not about executions. I mean, there's already studies on it. Doesn't really matter where you buy it. It's what you control is where you get out. That matters more, right? It really doesn't matter where you buy. You can have an idea and like you can have a strategy of playing the breakout or playing a potential speculative breakout, and you're playing with the trend or whatever the case may be. But it's where you get out that's most important, because where you know you're going to get out is how you can control and mitigate your sizing of your positions and your risk. Like, if I see a chart setting up and I'm like, oh, this kind of looks good. I'd be getting out, you know, down here. Would I want to enter right here if I know that I'm going to get down here? Well, if I do that, you know, I don't want to risk this amount of money or this big of a drop. So I'd have to have a very, very small position. But I think it's going to go higher. Okay, cool. How much higher, right? Then you think about, you know, where it could potentially go to. But that's exactly, you know, that's the case. Like, okay, so if I look at this as far as the risk, and I want this to be equal 1 unit, 1 RU, right? 1 risk unit. This risk unit, if this was your stop loss here, it'd be the same amount, 1 RU. 1 risk unit, right? So the entry portion of it doesn't necessarily matter nearly as much as far as strategizing around your position sizing. And I know this too because a lot of people want to have they want signal services. The unfortunate thing about signal services, we can take the same exact trades, literally the same exact. You can enter with me, you can exit with me. You can enter, you can exit. But if you have no grasps on what I'm doing around position sizing, we can start literally with $100. We can take 10 trades, the same exact 10 trades, but because I'm risking a different amount than you, we can have completely different results at the end. It's pretty crazy. It's not really crazy. It's actually just something that you got to really think through of, right? Target on XBI. I don't really have a target on XBI, but I can bring you up a measured move. So a measured move of this larger pattern would be something like this. All right. Up to like 125. That'd be ideal. But like I said, I don't know if it can go higher or lower. So basically what I did was I played this small transaction over here, right? A speculative play to break into here. I took some off and now I have some on. And now I'm looking for consolidations to see if it sets back up. Like, I don't even care if it comes back down into here, right? Then flags out. I want to play into this. And so I'll be looking for the consolidations. But yeah, overall, I mean, I'd be looking for up here. I mean, it would be great if it can come up here though, you know, And I don't want to be like fully out or anything like that. Unless if it's very extended, you know, and then I'm like, okay, all right, I'm getting out of this, and then I'll look to reset up later. We have a lot of big movers on the board today. This one was from the tight list this week. So if you're in the Discord and you have the tight list sent to you, I did change it up a little bit. I made it so it also includes names that have been on a big run, because the names that are actually making a large move, I think should be watched given the context of how they're moving after the presidential election. So what you can do in stuff like in situations like this where you get these large moves is you can apply anchor volume weighted average prices to certain levels and then watch to see how price consolidates into them and set alerts at those anchor volume weighted average prices. Look at coin. Coin is following through. These are all from this week. RIGL, it's following through more again today. Bristol Myers Squibbs, that's seen a big follow through today. Rocket Lab, boom, seeing a big follow through today. Tesla up another 9% today. iNod also getting follow through. SoFi also getting follow through. These are explosive moves, and I'd be very careful to try to just chase that stuff. The reason why I like putting these on the radar now is because now if we all of a sudden get 6-7 days, maybe more of consolidation, they can set up for a really nice opportunity. Butterfly or BFLY, this one looked really good setting up over here. We saw a nice breakout. So if we get, 6 or 7 days of consolidation or whatever the case is, or flag out, that could be a good setup. I mean, look at these things. Palantir, insane moves, getting very, very frothy. So yeah, if you start a new position up here, maybe it pushes up a little bit further. In my opinion, I wouldn't be looking at the daily time frame if you were doing that. I'd be looking at the, intraday time frame to play intraday perspective. But if we all of a sudden get, consolidations, flag out and stuff like that, these are all going to create good opportunities. Wolf, boom, seeing a big breakout there. Zoom Video, this was one that was on the radar, remember? We talked about it live. We said if it crosses underneath this low, which it did not, it would be, well, let's see, it shouldn't have. Low 65.87, 65.91. So this was to play, one of those earnings moves. It consolidates and to play it back up into these levels. Well, it was choppy and sloppy, but it never violated this low. And then now look at it. It's explosive. Whether you hold on to it that long or not, that's up to you. I don't typically hold it on for that long, but I'll wait for things like consolidations and so forth if they're back on the radar. Lyft was one that we talked about on a brief the other day. Just getting some follow through. I wanted to see a little bit more of a consolidation. Shopify also new highs on the year. I believe, new highs on the year just today, but nice consolidation. And then we're seeing explosive breakouts. So once again, things that I wouldn't really say chase, right? Obviously, I wouldn't chase this stuff. I would wait to see how it consolidates, right? Look at UA, right? This is a good example why I wouldn't chase. So UA broke out right on earnings, and then I like to see, 5 to 7 days of consolidation, or maybe it pulls back into a key level, and you can see it's pulling back in, and this might, scare people out. But if you're being patient and you're waiting to see, oh well, it's actually coming into back test, UA or UAA, I think. Yeah, both of them are the same. Okay, doesn't matter. So Under Armour, I don't know what the difference is. Oh, this is C. Let me see what UAA is. Here's A class. Okay, so we'll look at UAA. So we see the earnings moving, and now it's consolidating and pulling back. And you can see they're quite authoritative candles, pretty large ranges. And then it's getting a little smaller here. Volume, you can see a big move, obviously, and then volume dries up a little bit. Volume's drying up a little bit. So if we actually do kind of come in, and then we see all of a sudden, one of those hammer candles, you can play a trade through that level, potentially back up into these ranges. Qualcomm was another one, right? This one's coming in today. And honestly, it had a good earnings, but then it got faded. So this is one that I say be a little bit more cautious on. But if it does start to turn back up, it could create a nice little opportunity here. But right now, after earnings, it's kind of fading and consolidating here, okay? So I'd be just cautious on this, but also optimistic that we can potentially see this turn around and to be ready if it does want to turn around. Rum, I'm not a huge like fan of these type of names because of how they trade, but a lot of these names are squeezing, right now. So if you know, like if you're into like squeeze type trades, I mean, these are setting up nice. It's getting a little wild and crazy here from 557 to 684. It's at the high of day and you have earnings around the corner, right? So earnings is when? Is that after the bell? No, it's tomorrow. So yeah, coming into earnings, it's too much of a binary event for me to be quite frank. And you go into trade tab and you look at, okay, it could move potentially 92 cents. That's a big move, right? On a under $10 stock. That's like a 13% plus or minus. And so it's a little bit too kind of hit or miss for me, but I don't know. Think about Rumble. Rumble is supposed to be like a platform that you can talk about what it is that you want and not be censored or whatever the case is. And that seems to be a popular thing right now. So who knows? Maybe this thing fires off. It's a little bit too risky for me. Like GME, right? We talked about that on the last live stream. Somebody called out GME and we're like looking at it and we're like, wow, this actually looks, you know, this looks pretty good. From just a technical perspective, right? You see price action kind of building in higher lows and it was getting a little tighter and we were kind of just right. So we talked about it on this day, but not up here. It was actually like right around here when we talked about it. And we basically said, yeah, this looks like we can see a little quick pop or squeeze because of how it was kind of setting up. Now I wouldn't really chase it, even if we pop up to 30, which is very plausible in a name, you know, like this. So if I were to trade this, it'd be coming back down into the 15-minute time frame, looking at higher lows from this perspective, and then looking to see if it sets up to potentially move higher. But I wouldn't execute this on a daily time frame because where would my stop be? Okay, so I enter here, and then would my stop be down here? Would it be down here? Would it be down here? Because if it's way down here, to reduce my risk in like the position, like it would have to move like, you know, I mean, a 1-for-1, it just doesn't make sense to me. But then if it's too small of a risk and we've already went on this run, there's a higher probability for me to get stopped out here because we've already made a pretty aggressive run. So that's why I like, you know, this was the risk. And then it's like, oh, a 1-for-1 would be right up to here. A 2-for-1 would be right here. A 3-for-1 would have been right here. And these happen all the time, right? We talked about that earlier. Like that's why I traded this one. This was my risk. This could have been the risk. I actually had my risk at the low here. So this was my risk, right? And then it's up here. So that's 1 unit, you know, almost a 3 unit, you know, 1 to 3. For just being patient and waiting for consolidation. S&P 500 is kind of moving around everywhere. Nothing crazy. So it is what it is there. Let's take a look at SoFi. Yeah, SoFi is making a nice run. Once again, wouldn't chase this. I would be, if I was in it, I'd say probably look into some profit taking, lock in some, or move stops up. And if you want, I would say this should be on the radar to look for consolidations. But this was a huge move. And look at, right? So we talked about this one already too, right? Higher lows, right? This is a name that we talked about a lot. Higher lows building into what? A kind of a larger structure. So you have this larger structure, and then you have a smaller structure in it. Very similar to XBI. Now, I don't expect XBI to do this, but I'm going to be ready for it if it does, right? That's I have a position. I don't know if it's going to do this. For all I know, it's going to do this, right? So this is all I got to prepare for is this. This is the luck. If this happens and I'm in it, congratulations, I got lucky, right? Because I have no control of where it goes. I don't move markets like that. But yeah, SoFi, very explosive move. You know, we hounded PayPal for a while. Let's take a look at PayPal. PayPal, remember we talked about potentially moving into a markup phase over here. So far, it's looking pretty good. ARK Fund was one that I'm not in anymore now, but I definitely had the position, and I'll show you the original trade setup. It was posted on 10/14. Yeah, I don't know if he's going to come in. If you guys see him in the comments, just say something to me, the ICT guy. So here's ARK. right? ARC. So basically it's just stated that we're going up against a trend line. Today it's moving out of its 9-day consolidation, mapped out ideas for levels. Like, right, I don't, like this is just I draw out some levels as an idea. So let's go into ARC and see kind of what happened. And there you go. Oh my gosh, this thing is flying. So, so let this be a lesson to you as to why I don't really care about targets as much, but it does help kind of I give you an idea of far as like risk to reward, right? That's the only reason, but I wouldn't use these as like hard and set targets because they can blow through that. But here you go. So we started moving out of this little pocket. This was the risk. So, and notice, this is very important here. I'm going to draw it out actually like this. So if you have price like going down like this, right? And you have this, and it's in a trend line. And volume, right? Volume is kind of high when it comes down, you know, then it kind of dips and then it goes, you know, up, down, to whatever. And it's kind of like explosive and kind of explosive here. But all of a sudden, when you come down to the lower end, this is very critical right here. If all of a sudden you see volume go like this, just be on the watch out, because this means right here, volume's drying up, price action's getting tight underneath a key trend line. This can make for explosive trend breaks. Explosive. So if I go to this, I'm pretty sure this falls within that category, so just bear with me because I didn't look. But you will see this, you know, on various charts, if not this one. Okay. Okay, so here's the downtrend line, right? Downtrend line. And then it gets tight here. So you see the volume, right? You get spikes on it. It's doing the thing on the trend line. But as it was coming into this range, look at volume right through here. It's kind of tightening up, right? It got very, very small. Like if you just look at this volume right here, right there, and you compare it to everything behind it, do you notice how price action was, you know, volume's kind of coming in, right? Obviously, ignore this portion, but you're seeing big spikes throughout here. And then all of a sudden, and even here where you see like big explosive, like kind of like reversals with big volume, but it dried up a lot here. And what was price action doing? It was drying up underneath this trend line. Okay, so that's kind of one aspect of reading volume that's incredible because it can tell you that one, from an absolute perspective, price action's coiling up. One, we're also seeing higher lows. Two, we're seeing in a trend line. Three, we're back above some of these key averages. And I just say buckle up, because it doesn't necessarily mean that it's going to do this. It could do this, boom, and explode to the downside. But the reason why I mapped it out like this is because if we're wrong, we know where we're wrong. If we're right, we know where we can be right. So ARC right now, explosive move on ARC. Would I chase it here? Absolutely not. Nope. The entry was down here, and now it could be like this, or like this, right? Or like this. And then look for the consolidations. Look for 5-7 days of consolidation minimum, you know, and then go from there. Explosive move. Holy moly. I mean, this is the same type of stuff that happened with Oklo and NEE, right? Oklo, right over here. So ignore see how far this ran? Well, I mean, look what it was doing prior to that. Right? We don't know what's going to happen. Right? You get a big volume move here. Volume dries up. Price action goes sideways. Explosive move on bigger volume. Then volume really dries up here. And then bam, you get a breakout. You have no idea where it's going to go. Right? You don't know how high or far it's going to go. But what you do know is like, wow, it started breaking out right here. I know that I can risk this much. And if it even comes to here, that's a good trade. That's a 2-for-1 risk to reward ratio right there. Risking here, 1, 2. But that wasn't the case, right? It went like this. And sometimes if you just manage one trade like this, 2 trades like this, and you catch 1 or 2 a year, and you manage your risk so effectively throughout the course of a year, you can do real good. The thing is to not lose more than that 1 risk unit per trade. You don't want to risk 1 unit of risk right here, and then all of a sudden let that turn into a crazy loser. And the only way that you would allow that to happen is if some news came out and it was beyond your control. So you got to account for that stuff, but you don't want that to happen, obviously. Yeah, RCAF has taken a flying too. Nice. I reduced most of the risk in my portfolio. I'm now in preserve and protect mode. For me personally, for the year, I did really good this year. So now I'm just like, if something sets up, cool. If it doesn't, I don't really care. Yeah, I don't give out I don't give out trade alerts. But I can tell you this, most of my trade ideas that I post, I typically take. Not all of them, but I do take the majority of them. Like I took AON, I took FFIV, I took ISRG, I took Google, I took XBI. I took Beyond, but I was out of that like in a day when I got stopped out. I took some of the crypto miners on 10/16 when that was posted. Not in those any. Oh, well, I'm not in them anymore, but I do definitely have Bido and ETH still. My ETH position is up 33% and my Bido position is up 20%. I took NNE. I took Oklo. I took EXP. I took Mobileye, MBLY, but I got out of that position fairly quickly. Yeah, I took a lot of these, pretty much all of them. Do I hold anything long-term? Yeah, I mean, like my investment accounts, I don't really touch those. They're not really in individual stocks though, at all. It's just ETFs and that's about it. Yeah. I honestly hardly even look at them. The only ones that I'm active in is my swing trading account. Investment accounts, I don't care about to touch. Other than putting a little bit of money in when I get paid, you know, that's it. So. What's up, AA? How you doing, man? Sorry, I just saw that now. Danny, who's ICT? Nobody. Guy that wastes people time. That's about it. But he wanted to hop on my live stream, so I said okay. He was gonna do call by call analysis on a 3-second delay. But that's not why I wanted him on here to do stupid call by calls. That's dumb. Want to just talk about markets, but he can't do that. He can't do that. All right, let's take a peep here. Yeah, SPY is just still going sideways. Market net flow is still bullish, but like we pointed out, we started losing convergence over here. We started losing it now, so we don't have convergence, which all that means is SPY is not moving with the flow of market, but it's not like it's bearish. It's just kind of consolidating here, right? So if I go to Qs, look at this was the tight pattern that we talked about, right? It was like right here. And what happened? Well, we got a little bit of a flush, and now it's what is it doing? Nothing. It's literally just trading at the week to date. Anchored volume weighted average price, which is also at the daily, because today's Monday. If it starts heading down a little bit further, I'd be watching this upper monthly to date. And then on top of that, if we really start selling off the daily lower, but you know, market net flow isn't really suggesting this right now. However, those moves, if it's not suggesting it, right? If it's not suggesting it, I mean that it's a bullish divergence. So what is that bullish divergence? It's when the cumulative net premiums of calls is diverging from the puts. So it's not suggesting a pretty deep fall sell-off, but you do have counter trend moves when you are grayed out here. So this, simply put, to me means you do not have a trading edge. No edge in this specific in this specific indicator or flow, okay? If it was red and the red line was above the green line, I would say, and price action was right where it's at right now, I'd say, yeah, this is a no-brainer trade. I'd be trading it right down. So if you know how to trade from an absolute perspective and you think it's going to go bearish, I would not be really paying attention to this at all. I'd be looking at just price action as a whole and then going from there, and maybe playing into, you know, various levels. But right now, I wouldn't be interested in pretty much anything at that point, right? Chop City. The 0 date levels, let's see if anything changed for like that for the SPY. We'll go to SPX, we'll go to 0 date, update that. It got very clear here. Okay, so 6,000, 60.15. So let's update this. What did I say? Okay. It's already above that, so let me go 615. Well, we're going to put that one there, and I want 6,002. I guess it's already there, technically. Settings. Coordinates. Okay. Okay, so the levels that I just pointed out here, 6,000, and then we have 60.15. And then really not much. I mean, okay, so 60.20, 60.25, right? It's, you know, in decent size over here. And we're pulling into around 60.20. But if we don't see those grow in more size, this to me tells me that we come right back into 60.15. Let's take a look at SPX by CBOE just to see here just where that's kind of at. And you could see, okay, so this is where the differential comes in. It's at 6,009. So if we want a little bit more accurate reading here, right, you just go to SPX and we'll pull up CBOE's chart. Okay, so there you go. So this is on CBOE. I like the other one for its continuity, but you know, sometimes the levels don't match up obviously perfectly. I like it for its continuity, but if you want more accurate readings, you can watch this SPX by itself, right? So here's 60.15, and then beneath us, clone this out, was 6,000. So right now, the market's basically saying we're pinned. And remember, 6,000 is a very key level from a net gamma perspective. Okay? No convergence. And then we have SPY down here at 598. So I want to go back to SPY. I'm going to draw out some levels just in case if we see something happen intraday. 598 is down here. That would be a gap fill. 598. Okay. So if price were to come down to 598, I'd be watching this area for a potential bounce. Okay. Honestly, it looks bullish. The price action still looks bullish from just an absolute perspective. So is it executable now? In my opinion, no. I don't like the chop. I don't like the tight range right here for the day. So if anything changes from that perspective, if we get an exaggerated move, then I'd potentially be looking to trade it back into kind of where it's been trading for the day. An exaggerated move, potentially back into the day. I don't do these streams every day. Today's stream was done because I was, the ICT guy he challenged me to a live stream or whatever that means, a challenge. I don't know what that means. But that's why I went live today. November 11th. 11/11/11. Pacific Standard Time, that is. I gave him the link too. He didn't respond. But we already knew that. We already knew that, people. Well, I challenge you to do one tomorrow. That's awesome. Ever since you find I've been plotting the expected moves, but getting different values. You've been getting different values. How are you getting your expected moves? Alpha. You're saying experience with Rhythmic Pro options chain. Like what platform? Because Rhythmic is like a data, right? It's data. Like if I have Bookmap, I can use Rhythmic data or DX feed or stuff like that. John, I don't trade ICT. I trade Brian Watt swings. Brian Watt. That name sounds familiar. I don't remember who that is. Doesn't he do like Hakanashi candles? Or am I thinking of somebody else? Or however to pronounce them. Yeah, that is who I'm thinking about. How's he doing, by the way? Because I know he was right. I'm pretty sure that he was having some medical problems, and I don't know if he's. I haven't seen him on Twitter for a long time. By the way, he's a legit trader. Legit trader. Legit. Yeah, Brian Shannon's a good trader. I like some of his principles, Brian Shannon's. I can't look at his charts. Like all the lines just give me a headache. But if it makes sense for him, it makes sense for him. My most profitable trading strategy? Gosh, I mean, my most profitable is literally just looking for periods of contraction and playing them. Things tighten up. It's not even the strategy. I tell you what, it's not the strategy that makes it profitable. It's the managing of risk that makes it profitable. Because I can have a 90% win rate strategy, right? And people will be like, that's what I want. But the problem is, what people don't tell you when they say they have such a high win rate is that their profits are so small and their losses can get very big. So I can have a 90% win rate, and you could still be a failing trader. So the way that my most profitable strategy is trading with the trend. That's it. That's all it is. Trading with the trend, because strong stocks typically get stronger, weak stocks typically get weaker. Every once in a while, I'll put on a fade trade where things get over crazy, but it's typically from the typically it's from the long perspective. So if something gets really beaten down, I like to trade it to the upside. And when things get really extended, like maybe I'll put on a short. Like look at Tesla, right? I don't want to touch this with a 10-foot pole. I don't know where this is going to be tomorrow. I don't care about it coming down to here. What I do know is people are going to be looking to buy the dip on this thing. So even if it comes down to here, I don't really want to trade it down to 320 because I don't know if it's going to go there. Two, all the momentum's to the upside. So fading strategies every once in a while, but it's not frequent. Like I think I only put on a couple fades this year, and that was on miners. And I was, 3 for 3 on those things, trading miners. And the only reason why I faded miners, look, it's down 6% today. And we talked about it up here too. I think I faded it here and I faded it up here. And the only reason why I faded in these areas, miners, was because I was watching the price of silver. And when they diverge from one another, they typically fall back into correlation. So I was using a little bit of intermarket stuff. And then I did the same thing with TLT. Buying TLT, for example, on this low. to play it up. I literally closed out the very next day, but the only reason I did that is because of oil's move. Because there's a tight correlation between those assets, and one of them is wrong, so I'd prefer to take the one that looks the extended move, especially when you apply like outside of a quarterly move and so forth. So there was some fade trades that I put on, but understand that if I fade a trade, right, if that, that's not one, again, it's not the most profitable strategy, but if I do that, it's also, I'm out of the position probably significantly faster, like significantly faster than anything. I did trade TMF. I used TMF on that one. Sharing pressure, sharing. When is PSA though? Oh, Mr. Yen is related to Captain Jim? I didn't know that. That's kind of cool. Yeah, I had no idea. Oh, Mr. James. Oh, okay. Friends. I was about to say, I was like, wow, small world. If they were actually brothers, that'd be crazy. That's right over my head if that was the case. But yeah, friends, I get that. I never had a conversation with Mr. Yam, but or Brian Watt, but I thought that he was. I thought he left for a while to get better and just to kind of get off Twitter, get off all this stuff, and focus more on his health. That's what I thought was the case. But yeah, I guess I was wrong. I could have sworn. Maybe I'm getting confused with somebody. Okay, so there was a couple energy names that I liked. I posted these this morning. XOM. So look at, I actually, from a narrative perspective, I'm not really bullish energy names right now, but from a price action perspective, it's kind of hard to ignore. Okay. So if I'm looking at ExxonMobil, we broke above this prior area of supply. We're actually currently above it. Okay. We also, you saw a nice explosive move here. Volume dried up while price came in, and we broke the trend line. So we're holding this pivot, we're holding this trend line, and then, I mean, look at this price action. So I don't really care if you're bearish or bullish energy. What I care about here is like, okay, this looks like it has the potential to start making a move in the very near future. Now, because it's above a 20, 50, 200-day moving average, because it's broke out of a trend line to the upside and this pivot, my idea would be that we can get a pop to the upside and maybe even come test this area or higher. That would be the goal there. But the risk would be very clearly defined. This would be the risk. Hopefully this would be the reward. Or even smaller, right? You can potentially play it even smaller risk. But you get 1, 2, 3, 4 days of just super tight price action, right? And so what price contracts like this, you're going to have it expand. And for all we know, it's going to do this. Boom, it's going to expand on both directions, right? It'll gap down, close at the high. That would actually be bullish. Or boom, gaps up and then closes down at the low. Boom, that'd be kind of bearish, right? Or, if we get lucky, boom, boom, boom. It's not about being right or wrong. It's about just managing the risk and seeing setups that set up like this, right? This is a good setup. It looks good, but does that mean I overhaul the position and go all crazy? No, not at all. It's above a rising 5-day moving average too, right? Chopping up here. That's XOM, right? CVX is the same situation. All right, CVX. Seeing some higher lows, kind of explosive move out of this tight and then right into here, right? So if I go like this, zoom in a little bit, you notice how we talked about those trend lines and the price action got tight here, volume dries up. Then we see some kind of explosive moves of volume here, price action's coiling up here. So, like I said, I'm not one to fade this stuff, but they're on the radar, right? They're on the radar. We'll take a look at oil. What's oil doing? Yeah, oil's down 3%. So not I don't like seeing that when you know going long those type of names. But that's the reality, because there is typically a tight correlation. And go to the narrative of saying why I don't like energy names. It's because I feel like price of oil looks like it's going to break down. Now, on the flip side to that, you can look at this and be like, well, oil is taking a big hit right here. Chevron or XOM, it's coiling up and hasn't actually broke down. So what happens if oil actually bounces back up? In the short term, well, maybe that will produce a pop in XOM or CVX. But also, if this starts continuing to break down, maybe it's giving us kind of early warning sign that those things are going to break down. So not a huge fan, but you know, it is what it is. It's getting tight and it's potentially setting up for a move here. And it's in a bullish consolidation. So oh, I do have it right. Okay, about Michigan. Oh, it worked. Good to hear. Do I look at individual stock net flow before trading it? Sometimes. Yeah, sometimes I do. But really, I keep an eye on market net flow, because a lot of the times that I trade intraday are through like S&P 500, through the Qs, or a product that matches those. So no, not too frequently. If I were to be more active day trading individual names, I would probably look at it. Let's take a look at Starbucks. This one's starting to see a little bit of price action to the upside today, up 3%. This was one that's been on the radar now for a minute. We've been seeing these higher lows, and now we're seeing a breakout here. So if this is actually breaking out of a base, this looks like a buy with the stop under today's low. If you want to give it more room, cool. But that's a good look so far. Right? We're back above the 20, back above the 50, back above the 200. If you're okay to like manage with consolidations or pull backing in, or whatever the case may be, to set back up. But right now we are starting to see a little bit of a breakout. Let's go to the 15-minute time frame. A little frothy, so I would prefer to see it come in. But sometimes, you know, if you're playing a breakout, especially when it's kind of moving against, you know, the market, when there's not the correlation there, which is nice to see, especially if the market's going to hold sideways, people might rotate in these type of names. So I'd be looking probably around 100 to 99. That would be nice for me, like pulling in there. Back to the breakout area. But it's, you know, if you don't want to wait, I can see that too. I can see that too. You just got to make sure that your position sizing makes sense. So nice little look there. Yeah, IWM's at highs today. Let's take a look at IWM. Yep, IWM's at highs. It's actually coming into that area where I was talking about. So that'd be great if it comes out of here. I honestly would probably look to fade a move if it comes up in here. Outside of the weekly, quarterly expected move, and just hold that on. Not a big position, but maybe like a 2 or 3% position. And I'd probably use something like, what's the inverse of IWM? TZA, I think. I would probably look to get just TZA because it's a 3X, and I can use less capital. So for example, like I have a lot of longs on, but I can take like take 1% of my, portfolio and dump it into TZA. So I have 3% exposure of a potential extended move, and it could has the possibility to protect against my long positions if it comes in. But I like I said, I would prefer still, like, even though IWM is a very strong move, like I don't want to really fade it right here. I don't prefer that at all. I just would prefer it higher. Like get outside of the quarterly expected move this early. Because if I'm wrong, it's like, okay, I know it's going to digest, right? So if I'm wrong, so if I buy up here or short up here and it goes up a little bit further, but it's only a small position, I really don't care. Because I know that it's going to come back in and digest at some point, right? Even if it goes up here, it would just be 1%, the portfolio, or 3%. And then if it flags or comes back in, like I can always exit, but it's going to digest a very strong move. So the problem is I might not get it. And it depends on how it gets up here, if it gets up here, right? If it goes like this, I'm probably not going to short it there. But if it goes like this, gaps up and just flies up here, I'd probably look for the fade. So it depends on how it gets there too. Because the last thing you want is something like this. And then you enter like right here, like, yeah, I'm going to enter here and fade it. But it's like consolidating, a bullish consolidation, and breaks out here, right? Because you don't want to average a loser. It would be just a position, a placement, a position for going up against some of your other names. I wouldn't be net short in this market. Not the goal. But so far, yeah, it's looking really strong, but I would just love for this thing to just fire off like a rocket ship into the weekly expected move. Early on, I'd love that. I mean, look at KRE. So KRE was up 12%. The last time this happened was 2020 in November as well. This thing ran 50% higher over the course of 90 trading days. I'll show you. How do I do this? 5 years. 2020. Right here. Bam. November 6th, right here. That was up 12%. We pulled back a little bit. We shot up, and we kept going for another 50%. So, one, if you're fading a strong move, just know that you can get your face torn up. So don't ever average a losing trade. Upside, downside, just don't bother with it. Just trade. If it's working out, you can add a little bit more. And usually scale down while you're adding more. Now, during that time, it was a different policy too with the Federal Reserve, right? Now we're technically rates are high, and we're cutting rates. It's just a very interesting time, right? But KRE, yeah, getting some really strong follow through. You know, pulled down, boom. We saw a nice little move here following through. Is it frothy? Yeah, it's pretty darn frothy. So, like, this could be one actually. So, okay, the correlation between IWM and KRE is pretty strong. So if IWM really does push up higher and KRE is driving that, you could actually look into something like KRE to potentially fade. Another element would be obviously biotech, right? XBIs. There's a lot of biotech names. Look at biotech kind of coming in right now on the intraday time frame. But overall, what? It's breaking out too. So to see these come in a little bit and consolidate, yeah, I would just prefer a little bit stronger of a move, and then maybe that might be a good area. Yeah, we can take a look at AMD. Let's take a look at AMD. AMD, I'd be careful with AMD. I think the most safest asset to be in from terms of semiconductors is just at this point NVIDIA. The unfortunate thing is NVIDIA just got added to the Dow Jones Industrial Average. And if you go back through history and you look at the names that got added in after strong moves, they stalled out for a while. Like, look at Cisco Systems, right? I think Cisco Systems was added to the Dow Jones Industrial Average in, like, I forget when. I'd have to look. I'd have to do the math. I'd have to check it out. But NVIDIA just got added in. So you get this initial excitements at highs. Yeah. But this one, I mean, this is seeing strength. AMD is not, right? So if I go to AMD, you know, unfortunately, we're below a lot of these averages, right? So the 200 days starting to turn around. The 50 days flattening out, the 20 days down. So I think we can potentially be in for a lot of chop. But also be aware that you had earnings come out, and earnings was a bearish move. Now, remember what I say about bullish moves on earnings, right? I like to see the big move, and then I look for the consolidation, and then the follow through. Okay, well, on the flip side of that, what happens if you get a bearish move? We got continuation, you got a pullback, and now we're getting a little bit of follow through. So who knows where this thing could go? But what I do know is this: it's below some key trends. It had a bad earnings. I don't know if it was a bad earnings, but the market perceived it as bad. I didn't look into the earnings report. And it followed through. We saw consolidation, and we're seeing a little bit of follow through back down. So if I were to be bullish this, what would I prefer to see? I would obviously prefer to see, you know, maybe something where you start to see a structure like this. Then the 20-day comes in and then starts to like flatten out like that. The 50-day comes in, something like that. But it could take a lot of time. And then the 200-day, it's kind of starting to angle down here. So it's going to be hard to turn this one back up. So you need to see an explosive move, and all these things would have to start turning around. So this is one of those that it's just, if I were to trade it, it wouldn't be set up on the daily trade. It'd be looking at the 15-minute time frame, right? So I'm like, oh, okay, maybe I can play here. Look at, we're above a rising 5-day moving average, right? We pulled in, maybe I play a pop back up into these areas. And I'd play it a lot smaller time frames. Or I'd go into the daily time frame or intraday time frame, and I'd be like, I'd look at it and say, hey, is anything setting up from an intraday perspective? And then maybe I can play an intraday trade. But from a daily perspective, like I don't know what to do. If I just enter in, my risk would be right here. Right? So if I enter right here, my stop would probably be right here. This would be the risk. And then, you know, I'd have to, for a 1-for-1, I'd have to get back up to the 50-day moving average through a declining 20-day. Maybe if it comes up here, that's a 2-for-1, back up to the 200-day. And even if that was the case, I mean, look we're just in a range. So, I mean, that could work. I would prefer to have more ideals in my favor right now, but yeah, you can still set up a trade. You just, like, I like setting up ideals. Somebody's asking me about UAA in the Discord. Let me see. Has it bottomed? I mean, for the last couple of days, maybe, but you're getting a pretty significant follow through on UAA. I wouldn't, like, I would prefer to see some strength, you know, for UAA. But it is coming back into like these little areas here. Blowout earnings coming in. Yeah, I think that we'll probably see some sort of bounce or some consolidation in something like this, but yeah. Target for a SPY on the short. I'm not really trading from the short perspective, but we did mark out 598 as a potential level to watch. So this zone in here is kind of what we marked out if it's going to the downside. This was earlier though. We marked this out earlier. So let me see the 0 date. You know, it's a magnet. Unfortunately, this was it was green actually. And that was actually what I would prefer to play a bounce from, but now it's red, so it's kind of can act like a magnet. Green can repel price, so the green is at 600, and that's above us now. So I'd be a little bit more actually cautious if we start pricing back up to 600. So I'll clone this out. I'll move this to 600, right? Properties, make it red. So there's our zone range there. So what we said earlier, for those that may have just been tuning in, if we looked at this, I said basically it's choppy, but if we get some exaggerated move into one of these areas or exaggerated move, like you can potentially play it back into this range. But right now we're just in a chop range between a couple 0 date levels, 60, 15, and 6,000. You can go to the 0 date chart and you can see what I mean here. It's a very defined, well, now it's changed a little bit. So here was 6,000 and here was 60, 15, but looks like 59.95, which would, okay, that's still pretty spot on there. So let me draw this out. So here you go. Here's probably the bottom for the trading session. I mean, based off of just the current data. So if we get a move into these areas, maybe that might be set up for something, right? There you go. All right, so if we do get an exaggerated move here, maybe you can look for a U-turn of price action to come back in. You know, that's an idea. It's just not there yet. Know thyself. You can ask in YouTube live stream. I have them all up. It's just sometimes my eyes float to other places. Yeah. I'll look. Yeah, I can see the Jack. I'll look at the Discord one too here. Just give me a moment. It was kind of a long one. Give me a second. I'm going to run to the restroom and I'm going to fill up some more water. Let's leave on, oh man, we're actually coming down into this area so far. So I'm gonna leave this screen up just to see if it does come into this area, and I'll be right back. Oop. And by the way, Colby, good morning. And also, too, happy Veterans Day to all the veterans out there. Forgot to mention that. Today is Veterans Day. I'll be right back. All right, I'm back. My baby's still sick. Got better and then all of a sudden got worse. Kind of sucks. Got a cough. So we gotta check that out. But overall, he's eating and in good spirits. So that's a positive. Okay, so the question said, Laura. So Jack, if you're gonna ask questions, I can't do direct like about your current positions. I can only give like opinions on stuff. So. How do I handle that? I mean, that's a pretty complex scenario. Maybe if you can simplify the question a little bit, but it can't be directly about your, because the way you ask, the way the question's asked is like directly about what you're doing in your position, you know? So, and I can't give advice on specifics about people's positions. I can only say kind of like, what do I do? I mean, it comes down to this. So, because the question's it was kind of complex. The question really comes down to this. Do you like your position on right now? Do you not like it on? Is it too much risk? Is it not too much risk? And if it's too much risk, I typically reduce. That's typically what I do. If it's not working out in my favor, I don't double down on it. I'll just cut it. Or I'll cut some of it just to minimize some of the volatility. But if it's not about being right or wrong. It's if you are wrong, you're wrong. If you are right, you are right. And price action is going to determine that, not narrative, you know? So hopefully that kind of helps without me, you know, because I can't like walk through like individual people's like sizing and stuff like that. Can I cover longer duration price action during uninversion events, peak search as well? Yeah, I'd have to. I did have some videos on that, and even the Fed has a paper out on that. You can revisit it. The Fed has research on the 10-year, 3-month yield curve uninverting. Is there gamma flip lines on like gold and crude? I mean, there's going to be exposure on these type of products. I don't have them. I have SPX, NDX, Qs, but you can like, so Charlie, is it Shari? Or Know Thyself? In the query channel on Tradie Ticks, you can potentially pull it, not for that specific ticker like futures, but you can potentially like look up like the profile for USO or something like that, or whatever product. But in the pinned comment and miscellaneous commands, you can scroll down to the bottom. It's like the second one from the bottom. It says TR-GEX PR, and then you type in the symbol, right? So you type in like ticker symbol. I don't know if they do futures. I don't think that they do, but you could type in like USO for the symbol, and it should show the gamma kind of like profile. What'd I do? Let's take a look at market net flow. Market net flow, still the same thing. No convergence, bullish divergence. 599 is a focus level. 600 could be above us. 600's here. 598's down here. Right now it's just chopping. I don't like to trade chop. I do not like to trade the chop. Okay. I was kind of hoping to see this thing come down into this area, but I guess that was its move to come back into its little range. This name I was kind of watching. It has earnings in a little bit. And it's a little bit choppy, but ATAT, it's just consolidating. That was one that was kind of on my radar. Coin is up now 20% on the trading session. Just huge moves. Huge moves. See some of the names that are going down. ALAB, ALAB. This one looked good actually from a daily perspective, and now it's kind of coming in. Just saw some explosive move on earnings. Now it's coming in a little bit. IonQ was the same situation. So these are some of the names that I'd say you can anchor those volume weighted average prices to. So if I go to IonQ on TrendSpider or, you know, TradingView, don't matter. So if you, this is kind of what I like to do. So I wasn't prepared for this today, but you see this breakout over here. And if you apply an anchor volume weighted average price to the breakout candle, the big move, you can see it's held here and then price came into it today. And these kind of, this is why I put a lot of these on the watch list, is to see consolidations, how they end up coming into and around the kind of explosive anchored volume weighted average price from the explosive candle. SMR, same thing. Inside trading day coming in, it's down 7%, but it's really just an inside trading day. VERX, ARM coming in. Taiwan Semi, AAOI, that was earnings move, that was explosive, holy moly. So this would be also one to watch, AAOI, and I would probably just go into like the 15-minute, and I would just anchor from here. So what I would like to see is price to come into and around this anchor volume weighted average price at some point, and then see if it can cut back through to see if we get some follow through. APP, that was insane. A lot of names here are good for day trading because of just how wide these ranges are. Upstart would be another one, another candidate to keep an eye on for consolidations. Look at this thing. Like, I feel like this can easily come down into 77 and then see what it does around that area. That's Upstart. After breaking out, you know, just a monster breakout. Boom. On earnings. Honestly, it looks like it's about to fall to a couple bucks right now and touch this probably today. That's what it seems like. Price kind of came in, consolidated sideways. To be just fighting a very, very strong tape. So I'm not, once again, I'm not really interested in doing any short positions on names like this. But if it does come into those levels, it could be worth keeping an eye on for bounces. Mara, I don't think we talked about Mara yet. I talked about it on the 16th, and now we're finally getting some follow through. Was that earnings? Or earnings is coming up. Earnings is tomorrow. So, you know, no new positions going into earnings for me. But we talked about this one on the 16th. 16th was right here. It was just coming into a prior area resistance, faded. These last couple of days here, you can see price action consolidated. That was nice. This offers up good risk to reward on days like that. HUT was another one that we put out, and that was on the 16th. That thing was insane. This was the 16th. This thing, look at this thing. It's up 97%. And earnings is coming up. So we go to earnings. You look at it, it's like expecting about a $4 expected move. So yeah, I mean, if you don't want it to drop $4 on you, consider updating risk. Boeing, yeah, what's up with Boeing today? Boeing is down. I would be careful with Boeing. Give me a second. I'd be careful, obviously, because it is just going sideways, but it is overall in a downtrend. So it's not playing nicely with some of the other airlines. But who knows? I mean, we could be seeing capitulatory volume that happened on this stronger move to the downside. So I'll zoom out and show you another look of this. I think so. I made a video about this on, I think, this day right over here. And since that day, we're basically going sideways, right? Slightly down, sideways. Up, down, up, down. So the last 3 trading sessions, we saw this move here, and then we saw some inside trading days. And now we broke from that inside trading day. So I'd be careful on a break down from this inside trading day because that can push price, obviously, back to test lows. So you'd want to see this recover before anything, preferably to get back above the high of the trading session. Now, if I zoom out to like the weekly and we just go look at something like this, probably, I don't know, what's this look like? I mean, it's an interesting area, right? So you take this low, you match it with this low, kind of matches with this low, and then we're coming back into these areas here. So we've bounced from these areas prior. So will we do the same thing here? Time will tell. I think Save has earnings here soon. Look at, like, this one got absolutely hammered, but look at the weekly time frame, how it kind of coiled up here, and we're seeing a breakthrough from this. So I wouldn't chase this one, but here you go. Here's another example of how things tighten up. Pulls in, and then you see these explosive moves. Like it's up 31% on the trading session today. Right? What's UAL up to? UAL keeps on pushing. Pew. Another one we talked about was Jets, right? That's just we talked about this one over here. How it was pulling back into prior areas of supplies and potentially look for a breakout and kind of follow the Q4 seasonal path. So airlines have been doing really good this last month or so. Was it XTC? What was the, no, it wasn't XTC. The transports. I know transportation index, I can still look at this, but transportation index from the weekly time frame was another one that we were watching. And this one broke out. Then XRT was one that's on the radar, and this is also starting to break out. We talked about this one on one of the videos not too long ago, but we saw how it was building just this base, and a double of the base would be probably about around to 86. Was it IYT? Thanks. Thank you. Yeah, that's what it was. Appreciate it. But yeah, look at see this large base here, and then we're breaking out from it right here. This is a huge breakout. So if you miss it, you wait for the consolidations and see if it does shape into something more. But you're talking about a big base breakout here on IYT. If you go to the weekly time frame, it was a little bit more clear. Right? Boom. Very clean. And here's the thing, too. If oil is really going to start falling in price, if oil is going to come down in price, what does that mean for transportations? Oil is an expense, a large expense, the transportations. And the higher the oil cost, it eats into margins. So is the market pricing in lower oil via transportations being a positive sign? And this could be an early start to something, right? We might look back here in 2 years and be like, dang, it's all the way to 100 or 200 or whatever. Let's look at FDX. This one started to tighten up here too, starting to break out. URI, I think, is United Rentals. Will look pretty good here. Nice little consolidation and breaking out further. Financials are up 1.74%. There's crazy moves in financials. Crazy moves in financials. Upstart, getting close to that little level right there. Still watching SPY. Yeah, XRT we just showed. XRT looks good. It really does. I want to see consolidations But you can see that we are breaking out, right? I would consider that a breakout. Go to the weekly time frame. It's a little bit more cleaner on the weekly time frame, right? If this is actually going to turn into something, the 10 week's going to catch up the 30 week, the 40 week. So you'll deal with volatility. But if this is the first base of, the accumulation, right? Accumulation. So this is decline. This is potentially accumulation. And this could be the first stages of a markup right here. And this is the first base. And if this is legitimate, I mean, we can see this thing really go. I don't know. I can't tell you if it's going to be the case, but at least I can say, yeah, you'll be wrong if it breaks down from this base. Right? If this base gets violated. ISRG was one that was in the trade ideas. We came into that target area for those that maybe took that trade. I got in and I got out of the trade, but it did come into and around that target area. Here was the risk. Here was the reward, the potential reward. INTU, Intuit, another very strong mover. On something like this, I would be doing, I would be anchoring in a volume weighted average price right here and probably looking to see how price consolidates or from here maybe. Like in this range, because I wouldn't chase it, but we did make a strong move. So I'd be watching the anchor volume weighted average prices for when we retest. So you got this one, it did a U-turn. We can anchor to here, see maybe if price wants to come back into these ranges after price cools down, right? I wouldn't chase up here, even though that this definitely looks like it could push to 700 and higher, but I would be watching to see how it consolidates in those areas. And then I'd look to do the continuation. You do have earnings around the corner, so just be aware of that too. Here's S&P 500 is kind of coming into that level. So we'll see now what takes place. First time chatter, Mr. McDisney. Do you consider SPY running into the long-term trend line, 2007 high and post-COVID high when doing long, or do the short-term dynamics push through SPY? Are you talking about like a trend line? Let's just say this. I'm not going to create a short position because of that, because it's too long in time, but I'll be aware that we can run into potential resistance there. That's absolutely true. But if we're still in positive market conditions, because I see that you're a first-time chatter, I determine market conditions by two things. If we're in positive market conditions, I'm going to still be pressing to the long side. It's when we get out of those, and those are shorter-term things. So I look at the gamma flip line. Are we above it or are we below it on the SPX? We're above it right now. And are we above a rising 5-day moving average on an intraday time frame? When those change, I'll be more cautious. But till then, that's what's more important for me from a swing trading perspective. Doesn't mean that those trend lines won't matter because it is a larger trend, but that's kind of where my focus is at. GME's making a run. Let's take a look at GME, why this is pulling in. Yep, GME is following through. We talked about this one on the prior live stream on this day before it started moving. Did look good, and we're getting some follow through. Cool. If you trade it, I don't really trade those names all too frequently. If I do, it's like a day trade. Qs are back into the monthly expected move area. I mean, this looks, and it looks like we're going to be testing lows of the day here soon. Remember, our daily expected move is down here. We have the anchor volume weighted average price from the presidential election, the day, right, where we started getting all this stuff. It's right down here. I don't know if we'll get down there today or not, but we've lost convergence, right? When we lose convergence, you can have the counter trend moves. Still something that I don't really wouldn't trade. I don't trade this stuff. Right. All right, we're pulling into that, back into 6,000 right now, right there. We'll take a look at the 0 date, see if anything's changed from this perspective, if they're reaching lower or... Yeah, we're getting some action right at about 59.95, which is the lower part of... There's 6,000. 59.95 is right down here. So we're getting some action down here. Ooh, it's raining hard in my house. I can hear it pouring. Oh, have you really, Mr. McDismy? That's awesome. It's always good to know. So for those that have been watching here today, basically what we were saying earlier in the trading session is if we get an exaggerated move to the upside, I can see it kind of coming back in. If we get an exaggerated move to the downside, I could potentially see it coming back in here too. And that's just based off of where market net flow is at. Market net flow is pretty bullish. We lost convergence, so my thought would be that I would like to see it coming down a little bit more down into here of a stronger move. But you can see we came into 6,000. We're seeing a little bit of support from there right now, at least. I did not make the trade there. Sometimes I do. I'll let you know, but I was hoping for something a little bit stronger. Booyah, 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 booyah. The wind's blowing over the hill. Zero date flow. So market net flow, we can take a look here. This is for the day. And then we have a big zero date level over here at 599 for SPY, which we drew out. I don't think we tagged it yet. We came close to it. Just right down here. Oh, wait, sorry, my bad. Wait, what am I thinking here? 598? Oh, it's changed. Okay, so it was 598. No, 599 is the magnet. Price is below that. So 599 is up here now as the magnet. So back into basically back into that kind of zone of trading here for SPY. There was a level at 598 earlier in the trading session, which you could still be there. Let's just take a look here at the strikes. Yeah, 598. And then 599 from a total perspective, it's kind of a wall here. So I'd be cautious at 599, which is right about here. I'm just going to move this. And then if we can get above 599, that'd be a more positive sign. Now, the reason why I did that is just looking at this, the zero date structure. You can see 599 is a pretty large level, and this could repel price, right? Price is below it. So if it comes up here to 599 or 600, it can press price, back down. Let's look at the change. And then 599 is also kind of a magnet. So it looks, honestly, that's chop. It's just chop. I wouldn't try to solve too much of this. Wouldn't solve too much of it. Okay. Take a look back at XOM, see if anything's happened from the perspective of XOM. No, just sideways. ROIV. Man, ROIV looks like one that has just been ready to go for a while now. Earnings, though, is right around the corner for ROIV, so I'd cautious there. But ROIV, just look at this, how it's been kind of setting up here. We've seen a couple breaks, but it's just holding in this area. Unfortunately, we have earnings, so we got to kind of, I wait for that kind of stuff, but price action, higher lows, getting hung up right here. Couple whipsaws, breaks out, comes back in. Looking at about a 68-cent expected move. Okay. VNet. Gill. Dang, it's freezing out here. I'm cold. Trying to check to see if this ICT guy's going to come, but I don't think he is. I think that's a for sure no. I'm not surprised. La-da. The market right now, as far as rates go, the market is pricing in a 25 basis point cut, but it's only a 65% chance. A lot of people are wondering why they're even bothering cutting rates when they look at the markets. There's about a 34% chance that they keep the same. So, you know, it's leaning towards another 25 basis point cut right now. So I think we've got to take a look at what's going to be coming out on this week. We have inflation data on Wednesday. We got a lot of Fed speak tomorrow. So be prepared for a lot of Fed speak tomorrow. Waller, Barkin, Kashkari, Harker, see what they talk about as far as in terms of like, why did we cut again? What's the point of this? Then we get our inflation data. So if this comes in hotter than expected, oi, 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 oi. Then we get PPI, right? And then we have Fed Chair Powell on Thursday. Friday, we get some retail numbers. So action-packed there. And then we have some more earnings. Tomorrow we get Shopify. We get Cisco Systems after Wednesday's close. AMAT. Alibaba on Friday. Disney before the open. How's Disney been? Disney looked pretty good breaking out of this. Like, look at how tight this little contraction was right here. That was nice. Then we get some follow through, and now we have earnings. So let's see what earnings brings. I want to check back up on Starbucks, see how that's holding up. Starbucks still looks pretty decent here. I would love to see this come in a little bit for the day. Dropify. Is it SPOT? Look at this thing. It's crazy. Boom. Spotify's been straight up all year. That's crazy. Wonder what Lulu, what Ulta, and those names have been up to. Lulu's trying to make a little comeback after it's beat down. Ulta doesn't look too healthy. I haven't seen RH for a while here too. So RH, this is Restoration Hardware. This is a very high beta name. But if this is an accumulation phase and we're starting to like get into a markup, you know, we're above the 200 day, we're above a rising 50, this thing could really get going, right? If we just double the base, I mean, that's near 500 from 334. Right, we're kind of back above the 20 day, the 50 days going up, the 200 day. It's been consolidating here for a little while. That could be one to watch. Restoration Hardware. Crazy to think that, because Restoration Hardware is like super like expensive furniture, and every time I go there, I don't see anybody buying anything. I don't really know anything about their business though. In recent trade, you saw a little, you know, look at this big move down, close at the high. Now volume's drying up, and then also price action is drying up here. So I don't know, maybe through 340, we do pop right back up to 370. These are big moves. Like just that move to here would be like 10%. So you gotta really manage risk. Above a rising 5-day. Could be something. Go base champion. Did I mean, what did I say? What time did I say? 11 something? Did I say 11 p.m.? 11 a.m.? My bad if I messed up the time. Yeah. All right, so, okay, we came down below that 598. It's coming in back into and around the monthly expected movement. Now, I want to see here. So, okay, here we go. So we're doing that undercut right here. Now I want to check really quick because now this is kind of where things can set up. 0 date, see if anything's changed. 59.95, no, not really. Market net flow. Yeah, 599 is still a big area. 596 is a lot lower. Okay, so this is kind of where I would like to see a setup for a long. So what I'll do is, if I was to trade this, go into, actually I'll just go, no, I'll use this. Go into Thinkorswim. So go to SPY, go to the 1 minute. These are the type of moves that I like to see. So I'm not going to buy into this volatility right now. I don't know if this is news that's hitting the tape right now. But I'd be watching now to see if we can get some higher lows and see what comes of that, because this now can actually create some sort of a trade back to the upside. So we're getting that kind of exaggerated move. And if we do get an exaggerated move, right, we can very well come right back into and around this area. So what I'd like to see here is price action to just calm down a little bit, get this flush out, done with, and then we'll watch what happens. Let me move it down a little bit here. Okay, and the reason why I would like this type of move, to these exaggerated moves in this environment, is simply because market net flow is still bullish, albeit that the cumulative net premiums puts are picking up. Not much is going on beneath us. And then from a 0 date level perspective, I mean, there's just a big pin at 59.95. Right? So coming back up to 59.95 or back into this zone would be ideal. So let's watch. Actually, I'm going to go 59.95. Okay. Excuse me. Some very large range candles on just the minute time frame. So I'm waiting for that kind of stuff to tighten up a little bit here. See if I want to execute. I know it looks big and scary on a 1 minute time frame. So if we just show you once again the 15-minute time frame, this is not big and scary. It's literally a huge move and it's coming in to digest a bit. Okay. Daily time frame. Like we knew this was going to happen, right? So now, and this is getting pretty extended. So let me go back into Gamma 0 date. I just want to check to make sure, because this is where some opportunities are created. 59.85 maybe. That'd be pretty big. We'll see. Continue to watch. But I am going to set things up here just in case. Man, we're getting some wicked sell side right now. Just got to be patient. $59.85. $59.85. Gonna draw this out here just to see if it comes down. It's not really that big of a level, so I don't know if we're going to get down to 59.85 clearly, but because the main focus is still at 59.95 and 6,000, but this one grew in size a little bit. So if we really do come down there, I think that's my execution point. If we can make a sharp move, but I just markets can change quick. We'll see if it can get down there. And we'll just revisit market net flow again. Oh yeah, I don't know if it's going to get down there or not. So look what just changed here. 598, that green line is back, and 597. So come back over here to 15-minute time frame. There you go. So 598 can't act as resistance, but 597 is becoming a wall too. So let's go ahead and clone this out. Go back to 597. So we can kind of watch it. And there you go. So price action contracted. We finally got a little bit of a move. Got extended. And now from a 0 date perspective, 597 is a big green wall. This can repel price. So if we come back into 597, this could repel price back up. Okay. So that'd be an ideal level. And from a 0 date perspective, 559.85, which is about 8 points away. So I don't know what's driving the move right now. I don't really care, but those are some key levels and something to pay attention to, that most of our focus is basically right here at 59.95 and 6,000 from a 0 date perspective on the big product. 59.95, 6,000. And the further we go down and no traders are reaching out further, the more likely we are to see some sort of a snap back. Positive market net flow, no convergence. This is where you can get counter trend moves, right? Started here. Counter trend move, but still bullish divergence. Nope. Dang it. What was this at? It's 599. Was that 599? I accidentally just deleted that. I think it was 599. Yeah, it was 599. $598 now. Okay, so watch for 598. We're below 559.98. So just careful. Yeah, be careful. So price comes up to 598 on SPY. Do you notice the big change right there that just happened? It's a big bar right there. Repel price. See if anything's changed here from a zero date or from just a price action perspective. Still nothing. I feel like there's going to be a good setup from this, but it might come a little too quick in my opinion. Kind of interested now to look at what was it, UPST? Yeah, so the upstart now is pulling into that anchor volume weighted average price that we talked about from up here. So it'd be interesting to see how this kind of plays in and around this area. That was good for a couple of bucks. I didn't trade it. I'm not trading short. Go back to SPY. Kind of just watch this. SPY's right now at the upper monthly expected move. Remember, it's only November 11th. And it's already at the upper monthly expected move. Pretty wild. Well, definitely. So Mason's saying we'll chop till the end of the month. Definitely at least till at the end of this week. Because remember, the end of this week, keep an eye on 59.85 on SPX, by the way. 6,000 is that level, right? So 6,000 was the call wall. So let's go back over to net gamma. All right, so this is 6,000. They're even reaching out further now to 6,100. But remember, if you get way above it and no one's really reaching out too much further, it's likely to get pinned in around this area. So this is why we said earlier, you can go up, you come back down, and then if it comes way back down but nothing changes, so look for shots back right up. And if you go into the expiration of net gamma, 11:15 is when you're going to have a lot of that roll off, like a third of it, potentially more. Okay? And that's that 6,000 is going to be one of those huge strikes to see what traders do after that point. Okay? Like I said, I don't know if we're going to get to 59.85, but that could be a very key level. Just kind of hone in on there. The tweet, Daryl. Which one? Are you talking about the LimeWire post? Yeah, we can look at Tesla. I'm just keeping an eye here on SPY because I feel like it's getting into a range here that I can trade. Tesla. Yeah, what time frame do you want Tesla to be looked at? Because right now, it's just sideways for the day. Intraday perspective, obviously on a daily time frame, it's up. The LimeWire one was funny. Now the thing with Tesla is Tesla really helped the market out. on a big move up, especially when you look at all the other names that were not really moving with the market. So if Tesla comes off, that's going to put pressure, obviously, on this market. So something like NVIDIA would have to turn back around, you know, and that's not doing so right now. It's kind of just trading sideways. I'd be just cautious if you're shorting into these lower levels right here. I would be very careful. Apple's the dud, right? But Apple didn't even play the presidential game here. Like, it didn't move with the presidential election like the other names did. So Apple came off hard and fast. I go to the 15-minute time frame. I'd also say be careful being short here in Apple right now, because we're coming into more of this kind of value area over here. Price has been selling off. We had a little bit of a hammer candle form. So to come back up to 223, the point of control these last 10 days, I believe it is. 10 days, yeah. This is the point of control for the 10 days. So to come back up into this area at some point makes sense too. Yeah, it's gonna feel heavy. That's for sure. Tesla's gonna feel like a very heavy trade. I mean, but look. I mean, look how far it came. So this is normal. This is very normal. I would say, like, if it comes down to 320, like I said, I wouldn't short it down to 320. But if it came down here, I'd be looking for people to start buying the dip, right? And seeing kind of how it trades in around these areas. If it can make some higher lows and then start popping back up through. But Tesla's going to be a big weight, especially how it moved itself up on the rankings as far as market cap goes in the S&P 500. Take a look at SPY. We'll take a look at Hood, yeah, too. I just want to let me keep my eye on SPY here still. Yeah, it's just right now, just kind of consolidating this move. So there's not getting a snapback yet. Anything change here from market flow? 598. There's just a big wall there. Bullish would be above that. If we can't get above 598, that can press price back down again. 598's right here on SPY. So you'd want to see price back above 598 if you're bullish. You can just see, yeah, so this little range, 59.85 to 6,000, it's just the main focus for the day. So the further we get outside of this and nothing changes down here, I think those are the snapback opportunities, especially with how market net flow is at looking. So maybe it can flush out, come in, and then set back up a little bit later. Do something like that. So I'm going to wait to see how that sets up. Let's take a look at Hood. What time frame would you prefer on Hood? We talked about this one earlier. This is not something that I would chase. So we've made a very aggressive move. Now I'd be waiting for the consolidations, right? If you're looking at it from an intraday perspective, you might get shaken out and scared because you can see, you know, big moves down, right? Let's say go back to 32. That'd be a big move intraday. But if you like zoom out, that's just right to here, right? Or even to 30. And if you go to the daily time frame, it would literally just be kind of like that to 30 or 32. So I'd be watching the consolidations on names like this. I don't like entering after a big strong move. Thoughts on the JPM collar? Yeah, I think it's going to matter. JPM collar was like, what, up to 6,020 or something like that? We came up there, right? We're basically there. See how price came into that area? So, and that goes back to the whole net gamma thing. So 6,000 is a key level. The JPM collar, right? The JPM was, I believe, up to and around 620. And it's such a huge order that you got to understand that when you reach up into these levels, there's going to be dynamic hedging that takes place. People are going to hedge off some of that risk. So to come into these areas and see price pull back in, It's what we're seeing, right? Actually, now come to think about it, I got to actually open up my IBKR because I put on some protection and now I want to visit it because if we come into this level, I'll probably just exit some of it on my other account. Let me see here, portfolio. No, I can just hold on to it. That's fine. Yeah, I'll hold on to it to that level. I think we can come down there. Was ICT here? Nope. He wanted me to do this stream and he never showed up. I tagged him. I sent him. He said he wanted the link. I sent it to him. He's a no-show. He's probably going to have an excuse if I come back at him, obviously. He always has an excuse for everything. And he's all talk. All bark, no bite. What do I think about ARK? It's time to shine. I mean, I'll tell you, I'll show you. I was thinking it was ARK's time to shine here when I posted it on October 14th. So ARK looked really good right here. We talked about this earlier. It was coming into these trend lines, right? And during this consolidation over here, volume really, really dried up. So we kind of drew that out. And then if I go back to ARK over here, this is what played out. Very, very strong pop. You see this volume, it gets very, very dry in and around this trend line. Bam, we get this explosive move, breaking the trend line. So it played out in our favor. So I think that it does have a time to really shine, but I would not be buying and executing a level right here. I would be waiting for the consolidation. Let this cool off, right? I don't want it to come down 50% and just, even if it goes like this and comes all the way down and then goes like this, you'd be like, yeah, I'm right. But I would much more prefer this to happen and then break out, or this to happen and then enter in there. And the reason why is because the risk, I don't want my capital to be tied in all the way back down to 54 or something like that. Not to say it's going to go back down there or go back down here or wherever, but I want to see it. I want to see price digest for a little bit. All right, here comes a 59.85. Almost there. Let's see if anything here's changed. 59.597. That's kind of the magnet area. I'm going to check it one more time. 0 day. Get my stuff ready. Because I think I can execute a little trade here. What? What's going on here? What is going on here? Oh, I'm like, wait a second. What do you mean I'm not allowed to trade? Weird error. Okay, well, I set it up. We'll see if it does it. Palantir is kind of the same situation, right? If I go to Palantir, you know, very, very strong moves, but I wouldn't want to start a trade up here. Like, so I look for the consolidations, like the consolidation that happened here, the consolidation that happened here, right? Even like you can potentially see the consolidations over here, but it was a little bit, you know, choppy over here. So now I'd be waiting for more consolidations to take place. Oh, we didn't talk about SMCI, but we can pull it up. I'm not interested in SMCI because of the accounting stuff. I'm sure that there can be trades that set up for bounces and stuff like that, but I'm really not interested in jumping into something with the with what happened with like Ernest Young dropping and then this just the potential for fraud. I don't want to wake up to another bad news event or anything. I think that there's potential to trade the volatility from an intraday perspective, but I'm not confident enough in holding a swing trade until things get resolved. Check UAA or UAA, yeah, Under Armour. Yeah, I looked at this one already a couple of times today. It's still on my radar. We saw a big move and now we're consolidating it, kind of coming back down. I'd like to see it come down into here and then, you know, form like a hammer candle or something like that, like a little boop hammer candle, and then play a bounce back up, or even do that here today. But I'd be watching to see how this consolidates. Now you can already see these big authoritative candles. They're starting to get a little bit smaller in size, so that's good. Volume's drying up, price action's calming down, and it's still, you know, just consolidating that recent gigantic move. Market net flow, still doing nothing there, no edge. SPY came into that 597 level right here, pretty much to the T. Actually, that was probably to the T. Let me see here. That was literally the low, was 597 print on 597. So cool. Gotta be patient. I say, you gotta be patient. Didn't quite make it to 59.85, but we did make it down to 597. So now, if you set an order at that 597, you probably didn't get filled because you typically on these type of things, if you were to actually play that kind of a move, you probably go 597.01, or you just wait for it to put in a higher low and form from there. So let's go into the intraday time frame, revisit that. So I think, what did we say here? I think what we said was it would be nice to see it kind of just potentially flush us out a little bit and then maybe set back up for a move back into this area. So right now it's kind of did that. We'll see if it can kind of follow that same path. But nice move from 597. That's why these levels are important to watch, especially if you were short into 597. Let's take a look just to see if anything's changed. No, not really. The 597 still remains the magnet, so don't be shocked if it goes back to 597. And then 598, if you want to be bullish, I mean, it would be really nice to just clear and get out of 598 and just go through that. Not much volume being traded at all, so the price, the tape is kind of, one big order can come in and hit this tape and we can make some moves. But 598, we're about 30 cents from 598 right here. And that can repel price, push it back down. So just be aware that 598, we're just pinning between those two. Get above 598, that'd be great. Google just going sideways. NVIDIA just chopping around here too. Definitely NVIDIA, a move up higher would very well benefit the market. Apple is down 2%. It's actually kind of helping to see Apple pop up a little bit here. Microsoft is down 92 basis points. This could be potentially a double bottom. If we start clearing this high over here, it has the potential to move to a measured move. If that was the case, that would be very beneficial to the markets as well. Intraday double bottom, you know. Amazon it's been basing out pretty much all day. So if the bears are going to give up, even a pop in Amazon, like these, doesn't look all too horrible. Meta hit its low earlier in the trading session, seeing some higher lows build into these areas. It honestly can go either way there. Then Tesla's up 6%. But you can see that we retested the lows. Here was the high. Kind of the middle of the day here. So to even see it pop back up into 347, this area, I mean, makes sense. It would be just a chop day, digestive day. That move, if it does pop back into this middle of the range, it'd be very beneficial also for the S&P 500. You got Apple. You got Apple at the weekly expected move. Nice, nice. Yeah, we're so Apple. Apple, yeah, that was a big move actually. So in one day, that's pretty, yeah, good call there. Apple. I mean, you could trade around there and it could break. We already know this, but you know, if you're being patient, these are some important levels to potentially execute at if you're bullish. Yeah, so the Apple expected move for the week was right here. So yeah, we got under it. And sometimes when you undercut these levels after a strong one-day move, very possible to come back in, trade around it, or potentially even break from it. We've seen that plenty of times too. But you know, congrats on the being patient, right? If you try to buy the dip here, right, and then you try to buy the dip here, and then it flushes out, you know, it makes sense to be a little bit more cautious, be more patient. It doesn't mean we can't extend further by any means, but that's what the market priced in for risk. This lower level here. It's good stuff. Still not above that 598, and that can act as resistance, but we did put in a pretty big hammer candle from the 597. So literally to the bone, boom. Nice spittle pop, trading around the upper monthly expected move. Let's take a look at 0-date levels, see if anything's changed at all from a reaching perspective. Not really. So 59.95 is still the focus. 59.85 did get bigger in size as price got down there, but most of the concentration's up at around where we're at, 59.93. We're about $1.50 from 59.95. Okay. So if you did trade this, that probably was the move there, was that 597 pop. And now it's kind of just like kind of hoping that it gets back above 598 at that point. So you don't want winning trades to turn into losers from some of these key levels. They're trying to reach here a little bit. 599. They're trying to go for it. 599's up here. That would be a big move. So okay, so market net flow is pretty bullish. We're seeing a little bit of an uptick here also, which is positive to see on the green line. Red line is kind of coming in, and then we have traders on a 0-date reaching for 599. It's not bad. It's a not bad setup. Come in a little bit. And if it keeps on kind of holding that bullish momentum and we can get above this 598, holy moly, I mean, that'd be a nice trade back up to the daily implied or daily anchored volume weighted average price. Well, there was a big order. There it is. Remember, we just talked about that. So big order can hit this tape at any moment. Well, there it was. Notice the size of this order that came in versus everything else on the day. So this is where trends can start moving. So if things are bearish, things get very bearish. Or this could be a potential turnaround. So the market's probably going to get moving here. That was a large, substantial order. You can see that traders reached out to 599. Let me go ahead and go look at the strike, see if anything's changed. 597 is still the main magnet area for the day. All right. I'm going to leave this chart up here. I'm going to go fill up my water again. I'll be right back. That was a big order. So my thoughts on Palantir. Yeah, I'll talk about that again. Palantir, very strong move, looks very good. I wouldn't be starting a new position at these highs. I'd wait for those consolidations. And if you're in the trade, awesome. You can always look to mitigate risk because it's really volatile. You can update stop losses, take partial profits, or if it's a long-term investment, don't even worry about it and just see what happens, right? But you don't want a big winner to turn into a big loser. That's for sure. I'll be right back. Mike, you check all that stuff on your charts. Yeah, good stuff. I mean, it's important to watch these daily moves, weekly expected moves, because the levels are not just like random levels of potential. You know, it's what the market gives us. They spit out these levels. They're important. It is pouring at my house right now. Okay, I'll be right back. Taking a quick break. Okay, I'm back. All right, how we doing? I think I forgot my water. My baby has a cough. It's kind of bad. So I gotta probably go help out here in a little bit. Where are we going? Okay, so we're back. We're at that 598 level, which was that level that kind of got caught up at with a big gamma bar here. But it's changed since I stepped away for 5 seconds, obviously. And it's probably due in part by that large order that just hit the tape not too long ago. SPY's flat on the trading session today. Back above 598 would be very nice to see. So this is just the benefit of being patient, right? If you're trading today, like, right, you're trying to buy the first dip, second dip, third dip, looking at just watching some of these gamma levels make a huge difference. It really does. There's the break above 598. I bought a put on Palantir. You bought a put on Palantir. Cool. Yeah, I mean, if you're just making a fade trade and it's well constructed, like you're not like averaging into losers and stuff like that, you're just taking the opposite side, you know, as a lotto ticket or whatever the case may be. I mean, that's fine as long as it's not going to affect your portfolio from a large percentage basis. Because if you start fighting the market from a large percentage basis, the market's going to win out. You'll get lucky many times, but it just takes one blow from the market to do, you know, tick you out. But yeah, if you fade Palantir in the short term, right? That's the thing is some people could say they're bearish Palantir, but they might just be putting on a fade. But really they're bearish on a smaller time frame, not a larger time frame. Alistair, ICT did not come. The guy that made me set up this stream for him to come so he can show me what's up. Eighth. 5, 4. Okay. Let me stay logged in here. $5.99 is that magnet. $5.99. If this is a magnet, that'd be really positive, but we're kind of just chopping in this area now. So this would be positive to see market net flow to get back to green and this red line to continue this downwards projection, even if SPY were to kind of doodle around and this line to continue to go up and continue to diverge. That would be a good sign. That'd be a good sign. If you did take a trade down into these ranges area down here, I mean, you're looking pretty healthy. You can potentially update stops, take partial profits if it was an intraday trade. The main target would be up in these areas here. This is what I'd be shooting for. Actually, more down like this, more like this, kind of like that. This is AVGO, what I have up on my screen right now. Let me just clear this drawing so I'll redraw that. I'd be watching AVGO for a potential breakout. You have areas of supply it's been running into right here, and you see higher lows. I don't know, you can potentially call this a little cupping pattern. Handle, coming back in. It sets back up. Watch for a breakout of this area. That'd be a pretty positive sign. Yeah, you can definitely add to winning positions when there's pullbacks. I would just say wait. I mean, the pullback, if you're buying the dip, I'd probably say wait for it to show that there's strength, and then do it. The JPM collar upside was 60.20. At least that's what I pulled from Thinkorswim when I saw it. Doom, 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 doom. Doom, 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 doom. All right, let me see here. XOM, I want to see if this has been setting up at all. No, not really. Still consolidating, getting tight. I was seeing if I can get some sort of decent execution today, but it's just chopping around. And this is happening while crude oils broke down today, which is not ideal. I've never heard of the green line breakout strategy. But I mean, I like consolidations. I like breakouts to new highs. If that's what that is. It's what I like. Okay. All right. Were you everybody somewhat prepared for this kind of like these snapbacks, these kind of like moves like this? Hopefully you were. Hopefully that made some sense while we kind of analyzed it. Because that's what kind of we're seeing. I wouldn't rule anything out right now, but you can see 0 dates hasn't really changed. Go back to 0 date. Just a big, you know, you can just see it's just a big level of focus here on my screen. Back to the 6,000. I'm going to be calling it quits here on the live stream, people. Call it a day. I think that was the main trade for the trading session. If you were to manage to catch it, right, you just kind of got to be patient through these times, look at some of the key levels, and you could execute if you wanted to execute. Other than that, not really looking at too many swing trades right now. We pointed out some. If you're still in this, I mean, I would be watching this upside up here to 599. I would want to see this turn positive. It looks good so far. This big order that came in is probably what's helping this move. But you got to manage risk because it's a little bit of a chop sesh today. A little bit of a chop sesh. As you can see, we're flat on the trading session. We're up 0.1%. Okay. Hims. Yeah, Hims is crazy. I don't know about Hims, man. I like, so I got to pull this up because it made a big move. I don't know, man. I have a weird feeling about Hims. I don't want to get into it on this specific one, but I don't know if I trust HIMS. I mean, right now it's totally fine. I wouldn't be fading this at all, but because price action is price action. But I would, I just feel I feel cautious on a company like this. Overall, though, very strong setup, right? Breakout, see how it consolidates and so forth. All right, everybody. Thanks for tuning in. Thanks, Mike. Thanks, Roger. Thanks, Flyer. Thanks, Mason. Thanks, Chris. Giancarlo. Rumba. Stock. Alistair. AA. Thanks for tuning in. Appreciate you all being here. Like I said, if you are playing this little quick shot trade over here, just be aware that it's a little choppy today. The upside would be about $5.99, but as we get higher into these levels, your risk to reward gets skewed, right? That means you only have this much more reward or this much more reward, right? And then your downside risk is getting larger too. So you gotta mitigate. You gotta do what works best for you. If it was intraday, back at that 6,000, we got above it. We extended past it. We're coming right back. Goes back to the very beginning of the episode, how we talked about how that can be the case. I did take the trade. I am still in the trade. I'm going to take some of the trade off. Not bad. I executed pretty decently there. Almost. It was just around. It was just at $500. I'm slow to sell them on this laptop though. Let me sell a little bit. Just getting a little bit out. Lock it in, brother. All right, y'all. Thanks for tuning in today. Unfortunately, the Mike guy from ICT didn't show up. I'm not surprised. He's a waste of time.